Tom Lee just went on CNBC, gave his update on what's happening right now and what he thinks is happening by the end of the year. Bitcoin just went over 121,000. This is after it went below 120,000. I was getting notifications while working out, and yeah, I thought this could happen. I've been saying it for about a week now that we could see a dip between 119 and 120,000. And what do you know? We did fall down there. So let's talk about whether we're going to see a bigger dip. And I'll warn you, I don't feel that good. I feel pretty horrible, not because of the market, but because I just worked out and I am exhausted. I ran longer than I've ever run before. I'm trying to train for a marathon. I went up to 17 and a half miles straight, like 3 hours of running. And I just do not feel good. But that's why Tom Lee will help me out of this, because he will be talking for about half the video. Hope you're all doing well. Also, if you want to trade crypto, we have a link underneath the video to BYDeFi. I think now's a great setup for the next move on Bitcoin, and I'll show you why that is later in the video. But if you want to sign up now, you can get in on this new trading competition. We just started the new one, so we just finished a 2-week trading competition where we gave away thousands of dollars. I still have to get the final number, but I think it was probably tens of thousands of dollars actually. And if you want to get in on this now, you can start trading over on BYDeFi using leverage. We've been able to make life-changing gains throughout this bull run, and if you want to do that too, check out the link underneath the video. Now let's start with Tom Lee and what he just said about the market.
Talk to the tape. The rally's road ahead. I mentioned that call from Tom Lee. He does join us now. He's a CNBC contributor. It's good to have you back. Welcome.
Great to see you, Scott.
So what do you make of just how the market's trading today? We've had a nice run. It's given a little bit back. Maybe some concerns are out there about the strength of the economy, the labor market, some other stuff. What do you see?
Well, I think markets are trying to balance a few things, because we are navigating a little blind because of the government shutdown. But we also know that the real powerful driver of the equity market and the economy has been AI, which is not affected by this slowdown. So I think stocks are in this sort of zigzag pattern, but given we're in that seasonal period from October to year end, and we think the S&P can get to at least 7,000, it has been, and we've seen it this week, these pullbacks get bought. So we could be weak today, and I think we could rally tomorrow. And in general, I'd still be bullish into year end.
Are we whistling past the graveyard, Tom, on anything that could be concerning to you? I see a story right in front of me from Axios mentioning a Moody's analysis. 22 states are in recession or close to it. There was that Carlisle independent survey the other day showing the labor market is much worse than expected. Gold's been going up. Some suggest that's de-risking from the U.S. AI bubble. You mentioned the shutdown. Are we complacent towards any significant risks that we might be missing?
Well, I do think markets are less skeptical than they were in April and even in August and September, and we can see this in both positioning and AAII. So I think it is fair to say that the markets have priced in more good news. So like the things you flagged can be worrisome. But what I'd point out is that I think the AI story is actually strengthening, Scott. From our conversations with both companies and investors, it actually seems like the payback for AI, whether it's applications or services or companies' actual ROI, actually has improved in the last quarter or so. So I think that's what's helping actually create demand for spending. So I think we may be underestimating the sort of profit creation coming from AI, and I think that's why there's still legs to that story. But you're right. On balance, the data is mixed, and we don't really know because we don't have government data.
Yeah. You gave our producers this line that you still think it's the, quote, most hated rally. And I've asked you about this every time you've been on with me. I feel like now that's a little bit far-fetched to suggest that this is still the most hated rally. I don't find anybody who comes on, certainly not on the programs that I do, that is overly negative about anything. The prevailing view, even from those who were cautious before, are like the stock market's going higher. Now, it may end poorly way down the road, but it's going higher. So how can you suggest that it's still so hated?
Well, there's this thing where people can make like a backhanded compliment, like they might say something positive about the market, but they're really bearish. Because when I hear people say, oh, well, this reminds me of 1999, or, they're ringing the bell on the top of AI stocks, they are maybe acknowledging that the market is strong, but then they're trying to mark the end of that rally. And I think, for me, who was an analyst in the 90s, people forget that Cisco in September 98 was almost a 60 PE when the Fed made its first cut in 9 months, and then its PE went to 200. NVIDIA is that stock today, and it's trading at around 27 times forward earnings. I mean, it's got a lower PE than Walmart and Costco, which are like 35 to almost 50 times. So I just think a lot of good news has been accepted by markets, but I don't think it's necessarily priced into markets.
That's interesting. I mean, they went through some of the negative things that could happen, right? With maybe AI drying up, but they also didn't go through all the positives that could happen. Right now, there's still a tariff debacle. There's still multiple wars going on globally that affect supply chains and resources. There's also, this fear over inflation that could go away. We still have a very strong economy, and the biggest companies in the world continue to reinvest in AI, and they're just starting to see profits. Now, a lot of their AI profits aren't super easy to track. Like if Amazon's using AI to determine what kind of suggestions it should make to you when you're buying on the platform, it's hard to track that. But it's easier to track cloud. It's easier to track, ChatGPT growing just because they're just like a pure play on AI. And I think as time goes on, we're going to see these profits start hitting these companies. A lot of people are thinking about the end of this AI cycle and just thinking like the spending will dry up and that's it. They're not accounting for the massive amount of profits that companies are going to make. I mean, does this look like an overvalued company? Meta, near all-time highs. It's at a 24 forward PE ratio, a 26 trailing PE ratio. Keep in mind, it grew revenue by 22% last year. It grew net income by 60%. Does that seem like an overvalued company? Over the last 5 years, even if you smooth out these last 2 years of big jumps, 27% net income growth. How about Google? Google, it's been going up like crazy recently. It's at a 2026 PE. Okay, what about NVIDIA? NVIDIA, the biggest weighting in nearly every big indice, 33 next 12 months PE. Okay, and this has been growing, an insane amount. Is this even right? It just looks insane. 55% year over year. So this doesn't seem like these companies are necessarily overvalued. Now, NVIDIA is a different beast because if AI spending dries up, then their revenues could actually go down. But I don't imagine if AI goes poorly for Microsoft, all of a sudden they're going to have a hard time growing. No, they're going to continue to grow like they were before this AI spend. And even they're a little bit more richly valued. They're at a 32 forward 12-month PE. They're growing revenue by 15%. They're growing net income by 15%. Again, it doesn't seem like a very expensive market when you look at it that way. Although there are companies that are, a little bit overvalued. Now, earlier today, Bitcoin went under 120,000. I figured there'd be some people calling the top on Twitter, and there were, right? I mean, I explained that I think we could see some resistance between 126 and 127 just because this is where we saw the trend line from the previous peaks, and that we could see some resistance, maybe come back down to this multi-cycle trend line and try to flip into support. So I've said in a handful of videos over the last week, you can go back and look, that we might fall down between 119 and 120, right? And what do you know? We fell under 120. If we go down to this trend line, we could always break below it too, to be clear. I'm not saying that that's the exact bottom, but I still think this is extremely bullish. And I'm not saying if we fall below 119 that we're bearish, but if we bounce off 119,000 or even where we bounced off earlier, I think this could be shown as forming a bottom, right? Forming a bottom before another move up for Q4. Of course, people are worried about what's going to happen next week because we're supposed to get CPI and PPI, but at this point, we're not going to get it. But people are worried about what the Fed's going to do. People are worried about the economy, but the economy is strong. The Fed continues to, look at cutting rates. Don't be surprised if there's some volatility, but really there hasn't been a ton of volatility for Bitcoin recently. We've just been stuck in this range of 107,000 to 126,000 since mid-July, early July, really. So, we could see a little bit of volatility. We've seen some upside recently, but after we make a $18,000 move in 10 days, it's normal to have a pullback. So I wouldn't be too worried. If you do want to trade this breakout, if you want to trade this line here, right, there's a link underneath the video to BYDeFi. You can start trading with leverage. You can set this up in just a few minutes. You don't have to KYC. You don't need a VPN. You can also join the Telegram group underneath the video. It's completely free. There's someone from BYDeFi that's in that group. So if you have questions, concerns, anything like that, or you just want to have a point of contact during the bull run at the exchange that you're trading on, you can check out that underneath the video. I really appreciate it. I'll see y'all.